Get out of stocks now. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, Goldman Sachs has issued a dire warning on stocks, and this is why we're in the Goldman Sachs office right now, because when you see how the machines are positioned, when they start to trigger a sell, and it's going to cause other machines to sell and other systematic programs to sell, and then you're going to see a big move down in the market, which is why we're making the case where you may want to sell before it's too late. And that's why we look at the technicals, momentum, and machine positioning every week to find these big moves. And something else that's making a big move is gold and gold miners. Stay tuned for that. But we also have a sponsor for today's show whose stock is literally going vertical. They're a provider of AI-driven apparel sizing. And as their stock is about to break out of this range because they're getting a ton of press behind them and money's moving here, you're going to see their stock potentially move by up to 43%. We're going to show you how you can trade that. Stay tuned to the end of the show or check out the description or pinned comment for more information. Now let's head over to Goldman, where we picked today's story up with a headline: the tactical flow of funds, August summer doldrums. This is no longer a buy the dip market, as global equities have been unable to hold a sustainable bid. Why, Goldman says? Well, the market continues to trade in a vacuum driven by heavy flow of funds technicals. It's time, they say, for a thread on machine positioning. So one thing I want you to see here, as investors always look for little pullbacks to buy, Goldman's saying, look, this isn't one of them. And wait till you see how the machines are positioned here, because it'll make perfect sense of why you may actually want to sell. And here we can see, looking at the global CTA estimates, we don't have numbers this week, but notably what we can see here is in a 1 to 2 standard deviation move. That's the black and red line. That's where they're buyers. There's net sellers of global equities in a flat tape and big sellers in any sort of down move. But what about the S&P? Let's take a look at the CTA levels. Now, you don't have to worry about these lines because we provide this to you in our CTA-Timer Pro report. Here you can see the short-term trend is breaking down and about to go negative. The long and medium trends are following, but slower. And what does that mean, of course, for the S&P? Well, we're likely to see in a flat tape this week maybe a small amount of buying or a little bit of selling. In a big up tape, it's still not going to be a big buyer, but in a down tape, they're going to be selling in a major way. And this is a big risk for the markets because we're kind of getting into that time of the year. It's back to school and everyone's kind of focused on other things. We're going to see a lot of traders and big managers go on vacation through Labor Day, and it's going to leave a vacuum in the market where there's nobody to support it. And what does that mean from TD Securities? Well, let's take a look here, because over 44.50 to buy, under 44.25 to sell. So there is capacity if the market continues to move lower. You're going to see a lot of these fast algorithms like TD Securities. They're going to be sellers. How about Nomura? Well, they run a fast algorithm too, and they're noting that, hey, it's worth highlighting the asymmetry is now tilted in the opposite direction, meaning there's more to buy above a move than there is to sell at this point, but they said there's still plenty of supply potential with long signals remaining across the market. So what they're suggesting here is, look, if the market goes up, their machines are going to buy, and if it goes down, it's got to go down a bit more before they trigger a sell. But as you can see from that Goldman chart, those medium and long-term signals, they're very similar across a lot of these firms. So they're just hanging out there, but give them a little bit of time and they could be a big seller here, particularly if the tape gets pushed lower in early trading next week. Now let's take a look at our own signals. We got momentum is negative on the S&P 500. We're going to dig into the charts a moment and make the case of where this thing is going. The RSI is near oversold levels at 35. MACD, we got a big negative cross. Momentum Timer Pro picked this up 12 days ago and gave you the sell signals. That is this across the bottom here. We're seeing the 1 month signal now move into a sell signal from a buy. But notably, look, you see the 3 month and the 6 month window are still up there. It looks very similar, of course, to those CTA timing charts. Of course, we've got our own version right here. You see that short algorithm is telling us, look, they're 55% short. What we know is TD, Nomura, those other ones, they're going to chase this thing lower because ours runs a historical overlay and gives us an idea of where their machines are headed. We still see on the long side, this is our longer term, slower algorithm, still suggesting the machines are long, which we now know for sure. Well, what we have here, though, is a buy it open still at 404. Stop losses at 432.88. That could be breaching soon, and that means Friday's close at 436.50. If we don't get a bounce here, well, that means our stop losses are going to trip. We're going to close that trade out. Downside target, I've revised this lower to 413. Upside still around 448. Let's take a look at a chart here, because why 413? Well, that takes you all the way down right into this kind of chunk of trading volume right in here. You can see there's not a lot of trading in here, a lot of air gaps. You can see when price moves between these supply zones, and this is something we're going to talk about with our sponsor today and later in the show, is when you move between supply zones, it's very quick. I warned you there were sellers up here. Many people said, no, this thing is going straight up. And here you can see it's coming down. The next line of support is right around this 413 level. If that doesn't hold, you're down here to around 400 or just under. Notably, you can see the RSI not quite at oversold. MACD not quite there yet. But one thing you should very important to understand here is the machines don't care about the RSI. They don't care about the technicals at all. They trade price, and if price keeps moving to the downside, they're big sellers here, and that's our warning from Goldman in this week's show. Now let's take a look at how the QQQ is trading. And let's look at our screens here. Momentum's negative still. We see about the same setup on the technicals. RSI at 35. MACD's got a negative cross. But look at this. We are stopped out of that trade. We had to buy it open at 315. We alerted you put your stop loss at 359.24. That's now closed out at a 13.9% gain. Friday's closing at 358. Upside target remains a 50-day moving average. Downside target more realistic here, 338. Again, you can see our CTA report. It's 55% short on those fast algorithms like TD Securities, like Nomura, suggesting that they're likely to be sellers here. We're seeing the long side, the slower algorithms start to sell down. Even our Momentum Timer Pro report nailed that. 13 consecutive daily sell signals. Links to those are in the description below as well. Let's take a look at the chart on QQQ. And what do we see here? This thing is, look, it peaked out here. We suggested it would get up near this range. And now what are we looking at? Downside target 338. It puts it right kind of at the bottom of this trading range. And if that doesn't hold, well, look at this. It's just going to accelerate straight down into 317. Of course, remember, the computers, these machines, they don't care about oversold conditions. They care about price and holding on to their gains. If you see price continue to move, those medium and long-term signals are going to trigger sells. That's why our report warns you in advance of where these machines are headed. Let's take a look at the bond market now, because what we're seeing is, no major change. We've got this now. This is about the fourth week we've had this from on the report, and all this tells us is there's a major buy. If the tape moves higher, they are pretty much sold out. They're done. They're at max short positions, which we've known. Now, TD Security says under 4.17% on the 10-year. Now, keep in mind, these trigger points move higher and higher. That's what the CTAs do. They want to hold on to their gains, and particularly when they're short. They are not selling anymore. They're only buyers now if yields drop. And how about Nomura? They're still maxed out to the short side, as is all the other CTA models. And what we're looking at is trying to determine if we're down here in the spring somehow, because you got to remember, how did all this happen? Well, news from China, as the banks had, of course, likely sell treasuries to raise cash. So we saw this flood of selling. This may be the end of that move, and what could be one of the biggest trade setups. And we got another one for you in the show, that one of the biggest trade setups we've seen here in a matter of weeks. So check this out. Well, here we have momentum still negative, no surprise. RSI is at 32, bouncing off oversold condition. MACD negative cross. Momentum Timer Pro 17 consecutive daily sell signals, so it captured that. We still have our buy it open, and we're working on a recovery trade. We're going to show you what happens if you don't use stop losses. You find price goes the wrong direction. How do you recover from it? We're going to show you how to do that, but we don't have another buy signal yet, because look, we're maxed out on the short side of our CTA report. We're looking for a reversal here. So if you're a subscriber, and you still can be if you want, check out the description below. When we see this reverse, that will be our next sell signal. We'll put it on the report. If it happens next week, you'll see it on the Sunday show. Upside target revised down a little bit to the 21-day moving average. Downside target revised slightly lower. Let's take a look at the chart here. And what we see is nothing that doesn't surprise us at this point. We zoom into the 1-year chart. It's retesting kind of those lows from back here in November. And that's actually a positive sign. If we see price hold here, we see buyers come back here, this is likely springing higher. And one thing we can note, you can see a lot of the selling was in after hours, overnight trading, and created these gaps. And we know these gaps are likely to be filled to the upside as all of the selling works out. You can see the RSI here bouncing off, now oversold territory for the second time. The MACD just deep in oversold territory. We're bottoming out, riding out. If the market goes down, look for people to move into the bond market, watch the CTA report, trade that up to the upside, and that will be first phase of your recovery trade on bonds. Let's take a look at gold because we've got buying over 1935, not really helpful at this moment, selling below 1900. Now that's the bigger risk. We've been making the case, of course, that gold is likely to head a whole lot lower here. Our case was it would hit 1920. Many of you said, not going to happen. It did. Then it bounced off, and I said, it's going to come back down. And many of you said, nope, not going to happen. Well, it's back. The next likely path for gold now puts it at 1820. Let's check this out in a little more detail here, because what we have GLD, and of course, we'll look at the shiny metal itself. Momentum negative. RSI is at 30. So you're saying, hey, wait a minute, this thing is an oversold condition. It is. But remember, machines don't care about that. MACD negative cross, 14 consecutive daily sell signals on Momentum Timer Pro. We've been told you to look for a short opportunity, and we think it's going to get even juicier here. Next upside target, 181. Downside, 170. Look at our machine modeling. It is maxed out to the short side almost. It's getting there. We think that could be the catalyst to drive gold even lower here if it doesn't hold support. All right, let's take a look at GLD first. You can see it's breaking down below the 200-day moving average. Of course, we know one of the biggest reasons it's going down is that's my buddy Jay Bravo's big favorite sell signal. So, hey, who knows? That alone could be able to drive the tape lower here. Let's zoom out a little bit to this 1-year chart. You can see, look at the volume profile. You can see the sellers. They're all above there. They want to see the price of gold go lower. And of course, if that does, you're now targeting down here around that 168 level is where you got a lot of support at. Let's take a look at gold futures. And here you can see down here around 1820, that's the next zone of support. If buyers do not step in here and hold this, those buyers will become sellers. It'll break the 200-day moving average. It'll come straight down. You can see how fast it moves through these zones. That's the warning here. You get right down to 1820. Let's zoom into the 1-year chart. Look at that. Sellers right there at 1965. We know Goldman says their machine, or TD Security says their machines sell at 1900. Again, not caring about technicals. That could be your driver to see prices go even lower. How about those gold miners? Well, we're making the same case that gold miners are headed down. Again, many people said not going to happen, but it did. Look at this. Momentum is negative. The RSI is 30. We've got a negative cross on the MACD. 14 consecutive daily sell signals here. Look at this. Our machine modeling maxed out now to the downside. So what you're going to look for is as price goes lower, you're going to look for a potential reversal here. And where might we find buyers at? 2662. And of course, many of you said, hey, look, Steve, there's no way. Gold miners are not getting that low. Well, they did, or almost did. So let's check this out because we think this is a big opportunity as part of what we're saying is our other big trade setup on our show this week. And here you can see down here 2662 looking at support. Why do we see that? You've got buyers here, buyers again, buyers one more time. Where do you think buyers are likely to put a stand? They will come in here. Look, don't be the first person in. If it holds there and bounces up, that's where you want to put in your trade, throw your stop loss on. What's your upside target? Well, 29.21, maybe even as high, we can say up here to the low $30 price range. Likely we'll see buyers here. If that doesn't happen, well, now you're talking down here in the low $23 price range for those gold miners. That's where it's likely headed next if it does not hold support. All right, let's take a look at, of course, our other big interest here. We've got the dollar. We'll look at that briefly. And then our recovery trade on platinum still in play. Momentum is positive here on the dollar. RSI is at 70. MACD's got a big positive cross. 19 consecutive daily buy signals on Momentum Timer Pro. And look at this thing, maxed out to the long side. So again, those of you who trade currencies, watch that CTA report. When you start to see this go down, what do you need to do? Put a trade into the short side, throw your stop loss on, and there you go. Upside target, I'm pushing this way up to 29. Downside target virtually unchanged from last week. Let's take a look at what we have here real quick on the dollar here, running into that 200-day moving average. We've been making the case if that does not hold, it's going down here to 98. And you see that on UUP. We got buyers down here right at that 27.74. Could it push up here into the 29 range? Possible. Not sure how long it stays there if it does. All right, let's take a look at platinum real quick. RSI at 45. We got a negative cross on the MACD. We had a buy it open at 89.36 from the CTA report. We didn't tell you to put a stop loss on. Now you should, but we didn't. So price went down. It's at 84.45 as of Friday. We're showing you how to do this recovery trade because look, the CTA report is maxed out. So the first flip of this to the upside when it short covers, we'll put that second trade on. Let's take a look at this because what do we see with platinum? It looks like it is indeed trying to bottom here and move higher. If it does, we've seen this in the past where it kind of finds buyers and it will shoot up potentially right back to even where we bought in. But we want to pick up a recovery trade and add another signal. You can see the RSI starting to build momentum here. MACD is about to make a positive cross. So these are all good things that technical traders are absolutely looking for when they make their trades, and that's why we think platinum would still be a nice recovery trade. And one thing that we also think is a great trade setup here is our sponsor for today's show, and that is MySize Inc. And what they're doing is they're building smart tools for growing your business. They're an omni-channel e-commerce platform and provider of AI-driven apparel sizing and digital experience solutions that drive revenue growth and reduce costs. And one thing's growing is their stock. It's going vertical here. Symbol MYSZ on the NASDAQ. Again, symbol MYSZ. Hang tight. We're going to show you how this thing can move 43% as more buyers step in and drive this higher. They've got a multiple high margin recurring revenue streams. They got their AI driven measuring tech for accurate body measurements that improves online shopping experience and e-retailer return on investment. We'll show you more about that with a recent press release here in a bit. They've got their omni-channel high growth e-commerce platform with supply chain and tech expertise in the apparel business. They've got powering brand design teams with real-time customer sizing data to optimize a brand's product portfolio and inventory decisions. And they've got mirror-like touch displays that provide in-store customers with enhanced online shopping experience and contactless checkout. And here we can see something that is about to break out. Look at these supply zones. I want you to see the buyers have been accumulating shares all down here. This is what you look for. And then it moved up into this supply zone up here where the sellers are at real briefly. It made a big move. And now people are saying, are the sellers there? Well, there's a little bit of them. And yes, it's overbought. But remember, things can be overbought more once those sellers get worked out. And when they do, what do you see? If you get a nudge here and those sellers get worked out, you're talking a 43% move right into the supply zone above. That would be huge for MySize. Again, symbol MYSZ. And they're big. They're in the fashion e-commerce is continuing to grow, and selling clothes online is really costly. And what they're trying to do is bring down those returns, and they're making a big impact, as you'll see here in a bit. With MySizeID and Naiz Fit, sizing solution address one of the core problems of apparel firms have, and that shoppers' doubt and lack of confidence in size and style fit. And now they're showing, look, you can use your smartphone to get the right size. That's exactly what retailers want. And they've got a robust end-to-end e-commerce model that builds consumer confidence. And one thing you should have confidence in is this stock breaking out to the upside. Look at this. It's right in the supply zone here. We're going to keep zooming in, but a breakout of here takes you all the way up to the next zone because there's no sellers in between here. They'll get worked out, and you can see along that chart there hasn't been a huge amount of selling, so there's a lot of upside pressure here. It just needs a little nudge, and that's why there's a lot of attention on this stock. They've got top tier size solution retail partners in the casual, uniform, lingerie, swim and sport, and luxury spaces here. And here you can see, zooming in, they picked up some selling just a little bit in the after hours on Friday, but we're making the case this supply zone holds up here and you get some push behind it. It breaks out here. All the sellers, everyone who's short, they have to cover. They become buyers. Now we're talking that 43% move to the upside. If you ride this, make sure you get out, put your stop losses on, ride the wave, and don't own it for long. And here you can see on their last press release that just came out, Spanish fashion brand La Gorcia boasts inventory management and revenues with AI-powered Naiz fit from MySize. Check out what the CEO here had to say. They track our purchase numbers closely, so managing the depth of our size set working with 7 sizes per garment, very complex. We rely on experience and place significant trust in Naiz fit. We continue to monitor the dashboard to see what size recommendations have been requested per item. And then we optimize our inventory purchases to ensure customers have the sizes and styles they want while increasing our turnover and minimizing our unsold inventory. And get this, 127% increase in conversion rate, turning website customer visitors into purchasing customers. That, my friends, is the MyFit difference that they're bringing to their space and their customers, and you can be a part of that story. What's the symbol? MYSE on the NASDAQ. And with all of our sponsors, as always, you're under no obligation to purchase their stock. Be sure to do your research before buying or selling anything. We put all the information for you in the description and pinned comment below. With that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.